Okay, hello everyone. Welcome to this program. My name is Babak Abbassadeh, CEO of Toronto Centre. Welcome to Mitigating the Impact of Climate Change for Gender Equality and Financial Inclusion. We are honored to organize today's session at the invitation of the Center for Financial Inclusion. I understand they're having a very exciting and well-attended conference. Since our inception in 1998, Toronto Centre has trained more than 15,000 financial authorities from 190 countries to build more stable, resilient, and inclusive financial systems. Our mission is generously supported by Global Affairs Canada, Swedish SIDA, the IMF, Jersey Overseas Aid, Comic Relief, and the USAID. More than 1 billion women in developing countries do not have access to formal financial services. Women's ability to save, invest, borrow, control their money, and insure themselves and their assets reduces poverty and promotes better health for their families. If regulated properly, advances in digital finance can erase barriers of access in rural, remote areas and in impoverished urban areas. Why should financial supervisory authorities care, and how can they help? According to the IMF, risks to financial stability increase when access to credit is expanded without proper regulation and supervision. Investing in high-quality supervision can pay big dividends as financial inclusion expands. Because we are on the eve of COP26, it is only appropriate to also discuss climate change, which also disproportionately impacts the poor. In 2016, Toronto Centre began incorporating the effects of climate change on the financial system into our program because of the substantial implications to global financial stability and risk of crisis from climate change. Despite the efforts of the UN, IMF, World Bank, private sector, and the central bank's network for greening the financial system, much more still needs to be done to achieve the Paris targets. We believe it is time for decision makers to consider gender equality, financial inclusion, financial stability, and climate risk in an integrated manner to bolster the success of the Sustainable Development Goals. Our distinguished panel is seized with these challenges. They are Anita Bhatia, Assistant Secretary General and Deputy Executive Director of UN Women; Elsie Ado Abadzi, Deputy Governor, Bank of Ghana, and the Chair of AFI's Gender and Inclusiveness Committee; and Sharmila Hardy, Senior Manager, Financial Institution Groups at the IFC. Aurora Freri of the World Bank will moderate the session. Aurora is a very valuable member of Toronto Centre's Board of Directors and an advisor at the Office of Equitable Growth, Finance and Institutions at the World Bank. You have seen their bios, and to keep the discussion going, we will not be spending a lot of time on that. I encourage the audience to please send in your questions early through the chat function. Aurora, thanks again for agreeing to moderate this session, and I'll turn it over to you.
Thank you, Babak. Thank you all. It is a pleasure to be here at the 2021 Financial Inclusion Week, organized by the Center for Financial Inclusion to discuss climate change, gender equality, and financial inclusion. I guess, there couldn't be a more topical day today, the 1st of November 2021, to discuss climate change. We will see what the climate summit will result in. And with respect to financial inclusion, as Babak mentioned, this is a topic that, with which policymakers have been wrestling for the past few years. I would say that after COVID, the issue has become more urgent, as many household-led women or businesses led by women have been affected negatively in the past couple of years. So without further ado, let's explore the relationship between, climate change, financial inclusion, and gender equality. And I would like to start by asking Anita the first question, and in particular to really help us understand the relationship between these three concepts. And specifically from your point of view, as a senior official of the United Nations. Should we worry about gender equality and financial inclusion when it comes to the impact of climate change, especially in developing countries? And if so, why? Thank you.
Thank you very much, Aurora, and thank you, Babak, for inviting me back to speak. Great pleasure to be with all of you here today. And let me go straight to the question. But before I do that, let me apologize in advance that I will not be able to stay for the whole panel and will need to leave, as you know, Aurora, in about 25 minutes. I think this is, as was said at the outset, a really important day to be having this conversation. And I don't know how many of you have had the chance to look at the Secretary General's speech at the COP summit. But if not, I would really encourage you to do that, because it is, a really excellent speech. And one of the things the SG says in the speech is that, there is a sense that maybe we are, as the world, beginning to wake up and actually take action on climate. And he says in his speech, this is an illusion, that in fact, we are not taking the steps that we need to prevent global warming and to really cut emissions. And we know that climate change and gender equality are inextricably linked. But let me say a little bit about how climate change has impacts on financial inclusion and how that affects women particularly badly. So the first thing is, I think we can all agree that climate change, or the triple planetary crisis of climate, loss of nature, biodiversity, and pollution, destroys or depreciates assets and livelihoods. And a typical example would be the effect of extreme weather on small farmers, which is a segment that is disproportionately female. And to start with, there are structural inequalities because women already have fewer assets than men. And so we know that, for example, although women do the vast majority of the work on land, only 15% of agricultural landowners who have title to the land are women, according to FAO. So they don't have the financial means to shelter their production against floods, against droughts, against other natural disasters. And they are much more likely to lose their livelihoods and even their lives as a result of disasters. So as a result of all of this, their ability to access credit shrinks. And, it's worth keeping in mind that those chances of accessing credit in the first place were not that great. The second is, in the financial sector, when you look at the regulated financial sector and the banking sector, for instance, especially those regulations that are dealing with risk management, sooner or later have to incorporate the threats of climate change. We've already seen this happening in the international financial institutions. So, for example, the IMF recognizes that climate change is now macro-critical, and it is part of Article 4 consultations now for the IMF. Last year at Davos, Larry Fink said, as the head of the largest asset manager in the world, that climate risk is now a financial risk. And so, it is really important to think about how is this being reflected in lending practices. And what is going to happen is that access to finance is going to be more constrained for those who cannot, for example, post collateral that is climate resilient. And so that's an area where women are disadvantaged because of existing structural inequalities. And so there is actually a very sharp connection between the impacts of climate on women and the impacts of climate on finance, and how all of these intersect to create deeper gender inequality. Now, UN Women's job is to promote solutions that are inclusive, that are equitable, and that address these persistent barriers. And we know from the last Global Findex report that more than 1 billion women remain excluded globally. And we know that in developing countries, women are 9 percentage points less likely than men to have a bank account. And we know also, we have seen, by the way, you mentioned, Aurora, the pandemic and the impacts of the COVID crisis. Well, we have seen a huge and disproportionate impact on women's labor force participation. And because of, again, the intersection of the care burden on women and their ability to maintain work. So many women have actually dropped out of the labor force, which then means that they no longer have a source of income, which means they no longer have employment and earnings that would enable them to participate in a financial system. So these gender inequalities and access to finance intersect with inequality in access to other resources and laws and policies that are related to natural resources, productive assets that are demonstrably affected by climate change, like land, like water, like energy, will continue to be basically gender blind, meaning that inadvertently they continue to reinforce gender inequality. So the last point I want to make is that in order for women to break out of this systemic inequality and to adapt to climate change and to build a resilient future means thinking about how you actually remove these barriers, how you eliminate gender gaps, whether it's in climate finance, whether it's in technology, whether it's in social protection mechanisms, insurance mechanisms, anything that withstands climate and environmental shock. So the first thing is recognizing that it is fundamental to be concerned about gender equality and financial inclusion, to recognize that climate reinforces various forms of exclusion and hampers sustainable development, and to also to recognize that these two, climate and gender inequality, are probably the greatest development challenges of our time.
Thank you, Anita. Thank you for this very comprehensive overview, which really lays the foundation for my next question to Elsie. Now, Ghana has been at the forefront of trying to address the issue of financial inclusion when it comes to women, not just when compared to other many countries in Africa, but I would say globally, especially amongst emerging markets. So with that in mind, now that we are all aware of the fact that we're facing also the climate change challenge. Can you please elaborate and tell us a little bit, what do you think will be the impact of climate change on financial inclusion in Ghana particularly? Thank you.
Okay, thank you, Aurora, and I'm really glad to be here. As Anita has just very ably articulated, climate change does have great impact, particularly on the poor and vulnerable groups of society. I'd like to just say simply that climate change affects lives and livelihoods. And that being the case, you find out that the poor, the vulnerable groups who already, as she said, have faced structural barriers when it comes to access to finance, already have great difficulty when you talk about the impact of climate change. Why is that? In Ghana, we're seeing climate change manifest in some of the ways that Anita articulated. You're seeing extreme weather patterns that are affecting the mainstay of the Ghanaian economy, which is agriculture and the agriculture value chains. It's affecting the fisheries, the tourism sector, and all of these key sectors. Women are at the forefront, are the bedrock of these sectors, right? Mostly in the informal sector or in the micro or small business sector that you find across the value chains. Climate change, the way it's happening in Ghana is that it's affecting the production volumes of key crops and commodities. It is affecting the ways in which people like women have access to fisheries and all of these other industries and sectors I talked about, the food sector and all of that, where women are. What's happening then is that they're being pushed out of the financial system. They're losing their livelihoods. They're being displaced out of their farms, out of the water bodies that they do, they find a livelihood from, and all of that stuff, from the production cycles and all of that. Women are being displaced economically. And not just women, the youth and all of those typically vulnerable groups. So we're finding that though we've made a lot of progress in financial inclusion, as you said, within the framework of a national financial inclusion and development strategy, we're finding that the looming impact of climate change really is rolling back the progress we're making in financial inclusion. When women and other vulnerable groups lose access to markets, lose access to their livelihoods, and are dealing with the health effects and the other social effects of climate change, then they're being further disadvantaged. In Ghana and many developing countries, women, for example, already lag behind their male counterparts in access to finance. The gender gap in access to finance in the developing world is estimated at about 9%. And that's not very comfortable for policymakers. If you have the kinds of impacts we're seeing on women and their livelihoods, then we stand the real risk that we're going to have a lot more difficulty in women having access to finance. That's not all. I see the relationship between access to financial inclusion and climate risks as sort of not just one-dimensional. I strongly believe, and we at the Bank of Ghana strongly believe, that the more that women do not, and other vulnerable groups do not have access to finance, the more we're running behind on our climate resilience goals. For example, women are change agents, I always say. If women are empowered economically and financially, if they have access to finance, and if we're able to make some more gains in women's access to finance, women then are better equipped to help with the mitigation efforts when it comes to climate change, with adaptation and the transition efforts. Women in places like Ghana, women are really the ones that are making cooking and selling in the market, selling in the small food and eateries and all of that. Many of them do not even have access to finance to scale up on the investments in their businesses, so they can employ greener sort of technologies when it comes to cooking for the whole country, literally. And then what you find women in many parts of the value chains that if they were equipped financially would be able to lead real change that would help us mitigate the climate risk as well as help with the just transition to a greener economy. So I feel like the imperative is real, that if we don't deal with barriers to access to finance, women and other vulnerable groups are being more impoverished and excluded from access to financial services. And on the flip side, if we were to make more progress on women's access to finance and financial inclusion for other vulnerable groups, we would more likely begin to see more progress in terms of climate change, of the mitigants and to climate change, as well as the adaptation and the transition that we want to see, orderly, just transition to greener economies that we want to see. What have we done at the Bank of Ghana, knowing that this risk is looming? In 2015, the Bank of Ghana started a journey to explore sustainable banking principles for the banking sector. And after a few years of work, working with the IFC and a few other partners, the Bankers Association, the Environmental Protection Agency here, and looking at what other central banks were doing, the Bank of Ghana pioneered the development of a set of ESG-related principles, which we call the Ghana's Sustainable Banking Principles. These were launched in November 2019. The banks are all now complying with it as we require them to. We have earlier this year also developed a reporting template, which the banks are required to use to report to us, to our supervisory team, explaining what the ESG risks are, as well as reporting on compliance with the ESG principles. And these include not only transitioning to greener ways in which the banks themselves do business, but also helping to finance the transition to a greener economy. But we specifically also include in those principles financial inclusion and gender equity. And so we expect that banks are complying with these in the way they extend in financial services to women, for example, and to other vulnerable groups of economy. So this is one way in which we have tangibly tried to mitigate the risk that climate change is having on financial inclusion, and also, like I said, to be able to empower more vulnerable groups to help with a transition to a greener economy. There are more that we have done. There's more that we have done, and I'll be happy to share as questions come up. Thank you.
Thank you very much, Elsie. This is a very clear picture of how climate is really affecting gender inequality when it comes to access to financial services. And thank you for highlighting the differences in which this happens, both when it comes to adaptation and mitigation. I would like now to ask Sharmila from the IFC to take us back again to a global picture and to tell us how do you see the challenges in financial inclusion globally, and how do you look at climate risk in that respect? Thank you.
Thank you, Aurora. So as you know, when we look at financial inclusion, there are several indicators that we particularly look at. One is account ownership, and which is tracked by Global Findex, and the other one is the Msme Finance Gap. I think both Elsie and Anita have spoken about account ownership, which is a really important tool. And why is that important? Because that's a way you can actually store money, you can build savings, and you can pay your bills, of course, you can access credit, and make payments and receive remittances. In most high-income economies, account ownership for adults is as high as 94%. But that's not the same in developing economies, where it can be as low as 63% in some countries. On average, it's about 63%. But in certain countries like Cambodia, Mauritania, and Pakistan, it's really low. It's only 20%. So that is dismal when you think about it, just account ownership. When you apply a gender lens, and again, this is going back to what both Anita and Elsie mentioned, there's a 9% gap in terms of account ownership for women versus men. This is 9% just on average. But again, when you look at the details, you'll see that the gap can be as high as 30% in countries like Bangladesh, Pakistan, and Turkey. And what is more disconcerting or disappointing is this gap of 30% has actually widened in the past few years rather than closing. And we expect actually that COVID will have actually had a more adverse impact on this ownership gap. Policyholders actually have done, while they have helped increase account ownership, the lack of focus on gender has not helped. So we have not been able to close that gap in terms of account ownership. So I think it's going to be useful to think about this clearly. And then when you look at the MSME finance gap, this is something that we track also, because I think as Elsie and both Anita were referring to, MSMEs are the core of most economies. They support economic development, they support innovation, and most importantly, they support jobs. But access to finance is still frequently mentioned as the most critical barrier to growth. 41% of MSMEs in developing countries have unmet financing needs. And we estimate that the financing gap for all MSMEs in developing countries is 5.2 trillion. Again, then when you apply the gender lens to that, that's even more stark. Only 1/4 of MSMEs are women SMEs, okay? But yet they account for disproportionately 1/3 of this MSME finance gap. And why is that? And there are many different factors that we can attribute this finance gap to. One is the sector choice. I think both Elsie and Anita mentioned 70% of women-led enterprises are in the wholesale retail trade and service sectors, including health, education, and social services, which are not capital intensive and generally have lower profit margins. Then second, which is the more insidious part of it, which is our gendered barriers. Women are often time constrained due to household responsibilities, are limited by social and cultural norms and laws that discourage economic independence. They have less access to productive assets, such as real estate, that could be used as collateral, have less confidence in their ability to start and grow a business, and are less likely to have access to networks that would support their access to markets and help their growth journey. At IFC, as you know, we have a Banking on Women program where we actually help financial institutions and encourage them to lend to women SMEs. And this we do through a combination of both investment, longer term investment, but also through providing concessional financing jointly with advisory services so they can target this very important segment to us. In this, we have actually reached a very important milestone, which we are very proud of, which is we reached 3 billion in direct lending to women SMEs. And this, of course, has a multiplier effect because what we lend, then the financial institutions can actually rotate many times over and have a disproportionate impact in the economy. That said, again, the finance gap is huge. It's 1.2 trillion for women SMEs. So it's not something that we take lightly. From a climate perspective, I think Elsie has also mentioned this. Poor countries are actually 8 times more likely to be impacted or actually have been impacted by natural disasters in the last decade than other countries in the previous years. So we at the World Bank actually take this very seriously and recognize that tackling the climate crisis and meeting our urgent development goals is going to be the fundamental challenge of our time. And the way IFC is doing it is actually increasing our presence in terms of making sure that we have more climate inclusive targets. We are doing more green bonds. We are making sure that when we are looking at all our investments now going forward, as you might have heard, we are going to make sure that all our investments and our investees are going to be aligned to the Paris goals. And this we are doing to and the private sector is going to have a really key role in this. And this is something that we are really working at and making sure that we can catalyze and mobilize private capital for climate action. So I'll stop there, Aurora.
Thank you, Sharmila. Thank you very much. Now, we have heard about the IFC approaches. I would like to ask our colleagues at the UN to tell us a little bit how they strategize and factor climate change in their program. I know that Anita, unfortunately, has to leave us very soon, but I know also that Vipul, will be standing in for her.
Thank you so much, Aurora. And, I think it's really important for an agency like UN Women to not just advocate for these changes, but to ensure that our own programming reflects this understanding of the world and the interlinkages between gender, climate, and financial inclusion. So, there is work that we do to build what I would call the enabling infrastructure for such an intersectional approach. And I'll ask Vipul to speak to the work that we're doing on helping to create new asset classes and, a market for certain kinds of instruments. But I'll just end by saying that we actually do at UN Women a fair bit of programming on the ground that recognizes these interlinkages through things like climate resilient agricultural work, which we do in West Africa, working to eliminate, as Sharmila was saying, a lot of the discriminatory laws and policies. So to push for recognizing women's land rights through legislation, to pushing to work with institutions, like Elsie's institution, as well as others, to support finance for women entrepreneurs, particularly in the agricultural sector, and also working with a disaster risk reduction lens on digital microinsurance services, for instance. None of this is done by UN Women alone. All of this is done with partners like the local partners as well as the international financial institutions. But in addition to specific interventions, what is even more important in some ways for the UN is our normative role and our standard setting role, and that's what Vipul can speak to. I'll have to log off, I'm afraid, but thank you so much for the invitation, and I wish you a really good and productive discussion for the rest of your event. Thank you now. Bye-bye.
Thank you, Anita, for joining us.
Thank you, Anita. Aurora, would you like me to continue, or did you want to go around one more time?
No, please. I think it would be great to hear more about the work the UN is doing in that domain.
Okay. So thanks. So let me just pick up where Anita left off. I mean, basically, I think we're operating on three fronts in this area: the intersection of climate and financial inclusion. First, working with governments directly, right, in terms of the legal, regulatory, and the practical distortions to gender equality that should get removed. And I think Elsie mentioned some of those situations in Ghana, and Sharmila also talked about some of the statistics on how that's uneven. I think a typical reform is probably one where, for example, we will advocate for the public procurement of green projects and the fiscal incentives for new green jobs to include a gender balance component to awarding those contracts. For example, like in the US, you have various set-offs for minorities and gender related contracting. We will argue that some of the government policies around that should also incorporate very specific addressing of systemic issues for women to be able to procure those green projects, and those are the green jobs that are coming as a result of the transition to a green economy. Another example is, I think, in the strategic plan for UN Women, this next 3-year plan, a signature intervention is the area of women playing a role in the green and blue economy to support countries in policy formulation to ensure that women and girls benefit from the new jobs, as I mentioned, that are being created in both of those economies. Secondly, at the financial infrastructure level, again, I think the central bank and some of the stock exchanges have a big role to play there. So we work with some of those institutions in these markets. But we're working with several and different stakeholders, from governments to IFIs, private sector also entities, stock exchanges, as I mentioned, to ensure that gender equality is not just sort of thought of as a nice human right to deal with, but also how does it impact the bottom line of both institutions in the private sector as well as individuals working in the financial community. One of the examples in terms of the work that we're doing right now to actually, in a way, turbocharge this notion of gender and climate is our work we're doing right now with actually IFC, Sharmila's institution, as well as with the International Capital Markets Association, or ICMA, who some of you will know from your other bond work. Essentially, we are putting together and launching a set of guidelines in a couple of weeks on gender bonds. And why is that important? Well, if I was to, and particularly since we're talking about COP happening starting this week and next week, 10 years ago, when you talked about green bonds, there were very few institutions that were actually issuing green bonds, let alone buying green bonds. IFC, World Bank, some of the MDBs were leaders, but it hadn't really spread in the financial community. Today, when you mention green bonds, it's understood and widely accepted that this is a part of the fabric of the financial community. We would like to make gender bonds a part of the financial community in a few years' time. Hopefully, it won't take the 10 years that it took the green bond market to develop. But I think things like having guidelines that everybody can rally around and agree go a long way to developing markets. We've seen that in many instances And we hope that will happen in this case. And I think what's interesting here is that the gender bond guidelines that are being launched are sitting under both the social bond framework of ICMA as well as the sustainability bond framework of ICMA, because the notion is that it's not only addressing gender, but it's also addressing ESG and climate considerations through the gender lens. And lastly, maybe I'll also just say that how we're working with the development community more broadly in bringing about some of these changes on the ground at the country level. I mean, UN Women has about 80 different offices on the ground and works directly with the governments on projects and implementation of these projects. So let me just pause there, Aurora, with some of those specific examples, and I'll come back to questions.
Thank you, Vipul. Very interesting to hear about the gender bonds. So let's move on again and go specifically at the country level after this broad global picture, and let's hear from Elsie from what elaborate further the measure that the Central Bank of Ghana has taken to promote gender inclusion. You have already listed a number of them before, and also maybe give us a sense of what were the challenges that you faced when implementing this measure, and also if what you think are the next things that are that need to be done. Thank you.
Okay, thank you, Aurora. So I already talked about the sustainable banking principles, which are now being implemented by the banks. Another key intervention we adopted was what we call the Ghana incentive based risk-sharing agricultural finance, risk-based sharing or risk-sharing system for agricultural lending. Acronym is GERSEL. The point really there was to provide some mechanism that would provide guarantees to financial institutions that wanted to lend to the agricultural value chains, where a lot of women operate in. But here the idea was that it was going to be on a risk-shared basis. So GERSEL was set up as an entity that was sponsored by the Bank of Ghana, after which we passed it on to the government of Ghana to run away from our balance sheet. But then this has become a very important part of the ecosystem that is helping to de-risk lending to the agricultural value chain, where we find a lot of women in the smallholder farm communities and etc. And GERSEL's modus operandi is to promote more climate-friendly agricultural practices. And so putting a financial instrument behind that, we found has been very important. We also adopted a sex disaggregated reporting system powered by a new subtech that the Bank of Ghana invested in. By this, we require all our reporting institutions, all our regulated institutions, to report to us on their usual supervisory data, or prudential data, but on a sex disaggregated basis, both from the product side, the deposit side, all the various permutations of it, as well as on the lending side. So this, in a nutshell, are some of the key interventions we've put in place, and this we feel that would help us to measure really where we are, on a quarter by quarter basis, on a month to month basis, because the banks are reporting monthly, actually. Without data, it's very difficult to understand what the trends are, what the risks are, and it's more difficult to calibrate very specific policies and regulation. Was it Shamila who talked about the idea of needing very specific interventions, wearing a gender lens, and without data, it's a bit more difficult to do that. What are some of the challenges we faced? I think the first thing is what people referred to, this idea that gender-related stuff, financial inclusion, even climate, is sort of marginal, tangential. And if a bank is feeling good, maybe they can do that as part of some CSR effort, Even for regulators and policymakers who talk about this, they're seen as perhaps not being serious enough, and not perhaps being serious about the macroeconomy or financial stability and choose to while away their time talking about financial inclusion and stuff like that. So the idea of mainstreaming the very key important developmental challenges of access to finance, mitigating the climate risk, and providing for a just and equitable and orderly means of transition to a greener economy is lost on many people, both on the industry side and even within the formal, within officialdom. And I find that that's been one of the key challenges, really getting all stakeholders rallying around the fact that this actually needs to be incorporated in the business models of banks and other financial institutions. It's not something you do a little bit off and show off about. This is really your plan, because if you don't do that, you're probably going to be extinct in a few years when your loan portfolio is completely at risk. And the risk begins to play out, and that kind of thing. Or if the economy becomes, if economic growth, becomes very narrow and not broad-based enough, and therefore you are not sure of a consistent growth strategy as a financial institution. So we as regulators taking this up, even in partnership with the Banking Association and all of that, we have found that there's been a lag in terms of the industry coming along and the boards, the shareholders, more importantly, and their staff really understanding, even apart from saying, we like this, we're going to do it, really getting the full commitment of the boards, of the shareholders, of managers and everyone, and making the necessary budget allocations, to support a business model that is going to deliver this on a consistent basis. So that's the first point. The second point for me is capacity building, is a lack of capacity. So the best bank, the best regulator, even if they see the need and they see the point, still has a learning curve, really, from understanding how all of this plays out and how this plays out in traditional risks that are measured and are supervised by regulators. What needs to be done? What are the tools of measurement? What types of tools and interventions are necessary? How should this be done? What is a benchmarking? And different countries are doing different things. And it's a bit difficult, I think, for regulators as well as the industry to come on board very quickly. And so there's a lot of scope for capacity building. And here's where organizations like the IFC coming. We have benefited tremendously from technical support from the IFC as we have implemented, as we designed and are implementing sustainable banking principles. The Toronto Center is also beginning to do stuff like that. But I find that there's a real need for particularly the industry to be able to really understand how to change, their business models and their way of doing business. I think these would be some of the two key challenges that I think we have faced. And then also there's a financing aspect of it, really. Mm-hmm. And banks continue to talk about the de-risking. How are they going to de-risk? They feel they're going to have to take on additional risks in helping to promote a smooth transition to a greener economy, and where the pools of financing they can tap into. It is our belief that by complying with the sustainable banking principles, which reflect ESG type principles, they become more attractive to investors, to green investors and all of that, who are able to then invest in their equity or in their bonds and that kind of thing. And frankly, there's quite a lot of green money out there that is available to support. But other types of interventions like insurance, like credit guarantees and all of that are designed purposely to help with the transition, I think will be very important. We don't have a lot of that in the developing world. Mm-hmm. And so in particular, those that are geared towards addressing, the bottlenecks in access to finance for women, for example. Even if you find that there are such interventions, many of them are not designed with women in mind. And so you're not really closing the gap in access to finance for women as you try to solve the problems.
Thank you,
Thank you.
Elsie. Thank you. This is a very, very clear and detailed. Thank you very much. I would like now to turn, again, to let you mentioned this, there is a problem of funding, right, for certain segments. So let's ask our IFC colleague, which is an investor, one of the larger and more influential, I would say, investor in emerging markets. So how are you addressing the strengthening of women participation in the private sector, and why, as an investor, are you doing that?
So maybe, Aurora, I'll answer the second part of your question first. Why, right? I mean, I think for me, who works in the sector, it's obvious. I mean, if you do not support women entrepreneurs, you're losing an opportunity to support half the development of the countries. So this is clear for us. And if you look at it from a development standpoint, you must support half a population. You cannot neglect that. And how do we do it? I think I've already mentioned our flagship program, which is Banking on Women, where we lend to financial institutions to support women SMEs. But we're not stopping there, right? I mean, maybe I should take a step back. IFC in the early years was the biggest investor in microfinance, for example. And microfinance, traditionally, 90% of women, 90% of the customers of microfinance institutions are women. But we have progressed beyond microfinance, which is based on group lending, to go to SMEs, because that's where the jobs are created. It goes beyond just subsistence type of incomes, right? Creating incomes and that are more SMEs is where that happens. But now looking beyond SMEs, now we are thinking about it from a very broader perspective. And Vipul actually touched on this very important topic of gender bonds. Now we are encouraging our financial institution partners to actually issue more gender bonds so that we can create an asset class that is equivalent to green bonds. And hopefully, as Vipul said, once we have these definitions in place, we'll be able to get some more consistent use of the word gender bonds and see a growth in this. My team and I in the Financial Institutions Group, we are increasing our gender lens across all our products. For example, now we are very much focused on housing, because this is something that I also mentioned earlier and Anita talked about, is that women do not have access to real property. And when they don't have access to real property, that is a real deterrent to their growth, because they can't offer something as collateral. So, for example, we have just lent $50 million to a bank in Panama for both its Panamanian operations and as well as in El Salvador. And this bank is going to lend mainly to women-led households for their ability to go out and buy homes, affordable homes, which hopefully will be also green homes, because that's also something that we are looking at, the intersectionality of gender and women. But we're not stopping there. We're looking at women in trade. We know that 1/5 of cross-border trade is only attributable to women. Women are not seen in cross-border trade, and we are trying to increase that access to trade finance for women. Then we are looking at fintechs. We are a major early-stage investor in fintechs. However, we also recognize, and this is many studies have proven, that algorithms that these fintechs use are gender blind. Gender blind or gender neutral actually has a disproportionate impact on excluding women. So we are now working with our fintech colleagues to see how we can actually make sure that they are also lending to women. Then we are looking at, as I also talked about trade finance, we're looking at supply chains. We're looking at supply chains from a broader perspective, also from a procurement perspective. Are there women in procurement? Then we are looking at also VCs. One of the problem that we also see, venture capital is another area where women entrepreneurs are traditionally neglected. So we have recently IFC has recently lent $3 million to the Savannah Fund, which is a seed fund, which is going to go and help women entrepreneurs establishing startups in Africa. And this is really going to hopefully give a boost to these entrepreneurs to create more valuable enterprises across the globe. Besides just the financial aspect, I'm not saying that's not important, IFC is also focusing very much on how we can level the playing field in terms of making sure there's access to economic opportunities for women through employment, but also making sure through regulation, working with the World Bank, for example, leveling the playing field in terms of regulatory issues that may be deterrents, making sure things like gender-based violence are taken care of, making sure that women have access to affordable childcare, which can be a major deterrent also. These are some other ways that we are actually working to make sure that women's economic empowerment does not stop at just access to finance, but making sure access to markets, access to capital, access to communities is available to them. So that's how we're working.
Thank you, Sharmila, for this very passionate, intervention on behalf of your institution. I am wondering, we have heard a lot about the dimension through which, through which gender issue need to be mainstream. Not just in the financial sector, both at the more, what I would call at the country micro level, to make sure that we have the appropriate data to monitor the situation, such as the case in Ghana, as well as that we have the appropriate asset class created, and we have heard about the creation of the gender bond, but also how it is important to adequately remove obstacle and in fact encourage and support women-led enterprises in the agricultural sector, for example, which is a sector that, as I believe Shamila was explaining, a large percentage, Anita was explaining, a large percentage of farmers of a certain size are women. So I was wondering, what if Vipul could tell us, the UN has been advising across the board on all this issue. What do you think could be done to mainstream the gender lens in policy decision making, both regarding climate as well as agriculture, where women are overwhelmingly represented in a specific, when it comes to specific lot size, as well as green finance? Thank you.
Sure, Aurora. I think so. A couple of things on this point. In terms of providing sort of policy advice, I think one of the things that were mentioned by some of the other speakers earlier was the notion of data. And one of the first things that UN Women will do in any country on gender is to essentially ask for sex disaggregated data. And I know, Sharmila, on the private sector side, some of your clients who do this and make sure that they are able to provide this data, whether it's a financial institution or other corporate. But even governments, in many cases, and particularly as you get into lower income and ODA type governments, simply don't have the data. So they don't even know where to begin when it comes to addressing the gender gaps that exist. We are talking about aggregate numbers, and as you heard Sharmila mention earlier, even the aggregate numbers and percentages mask the wide discrepancy between male and female access to finance percentages, for example, from country to country. So the first thing we will say is, look, let's get a handle on sex disaggregated data at the government level through various ministries. Then the second thing is that leads from that is, okay, how does the government then actually start to adopt a gender responsive budgeting framework? Essentially bring in and integrate gender into its budget processes. And that's also a difficult challenge because, oftentimes governments will say, well, let's just set up a women's ministry or, a gender ministry, and that's it. They will take care of all the women's and girls' needs. Well, we know, and you all know from our experiences, that's not only is it not enough, but that's simply a start. It's like you are about to run a marathon and somebody says to you, okay, after the first mile, you're done. Yes, you need to get to the first mile to continue on the marathon, but that setting up of the ministry is just one, the first mile of it, if even that. And And then I think that what the gender responsive budgeting aspect forces the government to do is to essentially take gender and make it cross-cutting across agri, cross-cutting across, finance, cross-cutting across all the health, housing, Shamal, as you mentioned. So essentially bringing into the budget process, because ultimately from the government perspective, if it's not in the budget, as they say, it ain't happening, right? If it's not in the budget, it's not incorporated, it's not going to happen, no matter what the political will may be. And that brings me to my last point, which is the political will. We have seen countries that do this best often will start with a leader or a very senior person in the political side who actually champions gender across government. A great example of that today is the vice president in Colombia, Vice President Marta. She has taken it on as part of the president government to basically be the gender champion across government. So whenever there are roadblocks, she, as a very, very senior person in the Colombian government, goes and unblocks the roadblocks, if you will. So I think having a champion is important. But in summary, I would say sex disaggregated data, starting point, gender responsive budgeting, next step, and then of course underpinned by very, very strong political commitment at the top. I'll pause there.
Thank you very much, Vipul. We have a question from the audience. The question really relates to the, to the fact that currently we don't have standards to measure and to promote gender financing, I would say. And we have heard from both our colleagues at the UN as well as the IFC that this is about to change with the creation of gender bonds. Now, I don't know if you maybe can give us a very brief explanation of what this entails, and what do you think? I mean, sure enough, I'm sure this is a very important development, but what do you foresee after this? Once this has been introduced, what challenging you think we may be facing in country issuing or in institution issuing such type of bonds? Thank you.
Aurora, do you want me to answer that?
Yeah. Yes, sorry.
Absolutely.
Yeah. Thank you, Shamil.
No problem. Absolutely. So thus far, what we have done in IFC is very simply what we call gender bonds is how you use the proceeds. So use of proceeds is a very easy way, especially when you're doing it from a financial institution perspective. And what we do is basically, if we are lending to a financial institution, make to ensure to follow the money, essentially. Are they lending then to women? So that's a simple or simplistic way to do it. But if you want to go beyond financial institutions and you want to go to corporates, you want to go to other real sector companies, you have to have a much broader definition. And this is where the definition or the importance of having a consistent, cohesive definition comes out. So, I mean, I'm not going to try and steal the limelight from the upcoming event that we're having, but what we're going to track is basically 4 different things. Women in leadership. Is the leadership, the C-suite of this company or financial institution representative of gender okay? The second one is the employment. Do they actually is that reflected in their employment records? As I've already mentioned, the use of proceeds. Then the fourth one is to look at procurement. How are women in their supply chain accounted for? So these are just some simple ideas that we have in terms of laying down the markers in terms of what can be a consistent or cohesive definition for gender bonds. What is the challenge going forward? And this is something of a challenge that we have also seen that green bonds encountered. Investors will want to know, well, is this money actually going to where it was going? It's supposed to be used for, right? So we need to have transparency in these indicators, but also these indicators need to be verified and validated for that for the market to actually take this asset class into account. So I think the challenges is going to be now making sure that they'll be certifying quote unquote agencies that can actually verify and validate that this bond is actually going to be a gender bond. What is also of interest and importance is I think the market or the investor appetite is actually far outpacing the issuance appetite. So, for example, now you'll see investors are all about sustainability linked bonds. And those are very different from use of proceeds, right? Because they can be linked to various indicators, not and including gender, but not limited to gender. It can be green, it can be social, but then the whole challenge again is about verification and validation, and that again comes down to having data that can be measured and that can be verified.
Aurora, can I just add one thing on
Vipul.
what Sharmila said in terms of just the framing of this? So she's absolutely right in terms of the use of proceeds and the sustainability linked what we call sort of KPI, the key performance indicators approach. But I think it's worth just pausing to see where this market is and where it may go. So if you look at the total bond market in 2020, in terms of bond issuances, just globally, generally, across the board, it was about $7 trillion worth of issuances. So, we talk about all of these various products and niche products and so forth, but let's not forget that the biggest pools of capital is in the fixed income market. So 7 billion, just keep that in mind, $7 trillion worth of bond issuances globally. Now, we've all heard about green, social, and sustainable bonds, and everyone's quite excited about it. And actually, there's good news on that front. If you look at the last 3 years, the market has actually gone up threefold in green, social, and sustainable bonds to in 2020, where it was 600 billion. So $7 trillion of total issue, less than 10% or 600 billion is green, sustainable, and social bonds. Very good. And certainly very good from in the last 2 or 3 years, because that was triple the number 3 years ago. But if you apply a gender lens to that, it's actually pretty abysmal. Of the $600 billion, let's say SDG themed bonds in some way, shape, or form, less than 1% address the one SDG that talks about gender, SDG 5. So less than 1% of all bond issues that are considered development sustainable bonds address gender. Herein, now you can be depressed, or you can say herein lies the opportunity. That number, if we do things right in terms of putting the financial and architecture, financial infrastructure in place, and the interest that we have already are seeing and hearing in both the public sector and the private sector, that number should really take off. And I just want to leave that thought with you in terms of what we think is the excitement in this arena, and hence the excitement for the launch in a couple of weeks. And I'll post a link for your audience to join the launch in a couple of weeks' time. It's an open event for others. So thank you.
Thank you, Vipul, and thank you, Sharmila. It is really stunning, the data that you have provided. And I guess, to reap this opportunity that we have and increase financing, that support more gender balance in the economy, I guess, it will be key to make sure that the monitoring and the reporting is transparent, is well done, because I guess that the investors will need to be able to see the result and to believe in it. So with this, I think I would like to close the conversation of today. I found extremely interesting to exploit, to understand the relationship between climate, gender, and financial inclusion, to from a conceptual level, as well as applied at the country, Ghana, and to understand how financial policymakers and financial institutions are trying to tackle this issue, and look forward to the opportunities that lie ahead of us to fill this gap and to support the achievement of the SDGs. Thank you.
Thank you.
Thank you very much.